No, you cannot borrow the down payment for the house. I told you, we went over this months ago when
I
we first
know.
started this.
Yes, I understand. I understand that they're both mobile, but an RV is and a mobile home are two different things. It is not considered real estate.
Don't take that money. Do not.
No,
Oh.
the wheels have to be removed. I know it's on the ground.
Okay. All right. Get
I'm
back
sorry.
with me. Let me know.
All right. Bye-bye.
Oh, boy.
Wow.
Boy, you got questions? We got answers.
Regardless of how stupid they might be. But there's no stupid question.
Well, maybe.
Well.
Hello, everybody. My name is Barry Horvath, and this is Moving Forward TV with your local market update.
And I am DeLynn Gasson. Thank you so much for joining us today on Viewer Question Day.
Yes, it's so exciting because we don't get any questions.
We do a lot of these shows, obviously. We're in our 5th year, I think, doing these shows. And we do get a lot of questions emailed into us or people call us. And, a lot of questions spark from our shows, which is good because our show is all about educating our real estate professionals out there and our real estate partners and consumers, buyers, sellers.
Yes.
We're all about education.
So DeLynn and I decided we're going to take your top stupid questions of the week.
No.
And answer them.
They're not stupid. There's no stupid questions, I said.
Oh, yes, there are. Oh, yes.
Well, sometimes. No, just questions that surprise us that somebody didn't know.
Yeah.
That's all. Like an RV. It's not, you can't get a mortgage on an RV. And I know they're $200,000.
No, not a home mortgage, but they do RV loans.
Which is different than a real estate loan.
Yeah. So that's
keywords, real estate. But anyway.
All right. So this is one we get all the time.
Yes.
I love this one.
In no particular order.
And people say, well, I only need it. Remember last week we went over the different down payment programs, 3%, 5%,
right,
100%. And then people think they're all good. And then you look up line and they're like, well, you said I could do 3% down. Yes, you can. And then they say, oh, and we look it up. This is a condo.
Okay.
That's not going to work unless it's on the approved list. So the biggest question we get, so I always tell people, what's the difference between a townhome, a single family residence, a villa, and a condo?
Right.
What's the difference?
There is a big difference.
There's a huge difference. What loan program you go in is totally different in a condo versus a villa, townhome, and a single family. So just for the record, townhome, villa, single family are all treated just like a single family residence. A condo, the way the association is structured,
there's hair on condos.
There's hair on it. Is totally different.
There's hair.
So the down payment's different. The rate may be different.
Right.
There may
Usually
be adjustment. And because I think what people need to understand is when we're approving a condo, not only you approving the borrower itself, but you are approving the project and the HOA. And it has to do with how they budget their money. How much are they putting for reserves? How many investors own in that property?
What is the delinquency of the HOA fees?
What are the delinquencies? Because think about it this way.
That's huge.
You're a lender, okay? If that HOA fails in a condo, now they've got a problem because the homeowner is going to fail too.
And who's that going to come out? You're the owner of that condo. It's going to affect you. You're paying your dues, which is great. But if everybody else is delinquent on theirs, how are they going to pay the lawn people? How are they going to pay the electric bill in the parking lot?
Yeah.
How are they going to pay for the pool?
So all of a sudden everything skyrockets in your HOA fees, and it could cause a project to fail. So there's your difference. So Make sure if you're pre-approved, if you are buying a condo, make sure it's on the approved list.
And I know townhomes and villas sometimes have the exact same, HOA fees, and definitely some struggles with those as well. Same thing could happen. But it all has to do with how, when the project was first either built or converted, some of them were apartment building conversions, it all has to do with how the builder or contractor filed the paperwork with the county. So you look up in, whatever county you're in, the property appraiser's website, and it'll tell you right there on page 1 if this is a condo or if it is a single-family residence. Townhomes, villas, most of the time are considered single-family residences. Condo, it'll say the word condo.
All right, I got to tell you, that
Yes.
really wasn't a stupid question at all.
No, that wasn't a stupid. And that's one we get a lot. So.
All right, let's get the next one here.
Okay.
Will the Lightning make the Stanley Cup Finals this year?
That was yes. The answer is yes.
Hey, I do
But
get
that
asked
was
that all
not
the time.
question.
So
that was your question.
I know. It is a good question. So yeah,
So
they're
do
like
you
this.
think
They're,
I know.
they're like this. They're like win,
only
win, and then the last.
know, they lost 2 on the road, so- I know.
they're a good team. That's
They're
all I
good.
can say.
We love them.
But that's not
And
part
we're
of the show.
okay, so the
That's
next
part
question.
of our show.
That's right. The next question is, what is the difference? This is a good one. This comes from one of our real estate partners out there. What is the difference between a pre-approval and a pre-qualification? I was actually thinking, and I spoke to at our Lunch and Learn, our most recent Lunch and Learn, I spoke to a couple of realtors and asked them, we were talking about pre-approvals versus pre-qualification. And they actually wanted, yes, please do a lunch and learn on that, because it is kind of confusing to people. Am I getting pre-approved or am I getting pre-qualified, and what is the difference?
Well, pre-qualified can be just simply going over all the debts and the income and saying, yeah, you're pre-qualified for this amount based on what income and debts you have. So,
Without verifying a
yes,
thing.
exactly. So you tell me,
So pre-qualification, chances are
yeah, you
there's
tell me you
no
make $100,000 a
verifying.
year and your debts are $500 a month.
It's almost like that stated income.
Yeah, exactly. And then all of a sudden,
years
the
past.
tax returns come in, and all of a sudden they had a side business that wrote off everything,
Right.
or they've been 1099 now for 3 months,
Right. So
or they got commission for 3 months. You've never gotten that call, have you?
this morning. So on a pre-approval, we've checked everything. So we've received their documents, we've received their tax returns, we've received their credit report. In most cases, we've run credit and everything. We've run them through the system on a pre-approval, and we've gotten them an
approved eligible.
Approved eligible through the DU, Fannie Mae or Freddie Mac online system to get an approval for them. So that's a big difference. You definitely want to do that. There's a lot of people out there that are just doing kind of qualifying. And again, that's where you run into some problems, because like Barry said, they're just kind of like taking the preliminary. We can say to somebody, well, what do you make? And they say $100,000 a year. Then we find out when we get their documents, oh, wait a minute, that's 1099. They made $100,000, but they wrote off $90,000
That's
in
not going to work.
expenses.
That's not going to work. All right, so here's a great question. What credit score do I need to get a loan? And you know what? We're going to tell you right after this break.
Hi, my name is Joe Stalteri. I'm one of the owners of Complete Care Systems. At Complete Care Systems, we do carpet cleaning, upholstery cleaning, tile and grout sealing, wood floor and laminate floor deep cleaning, as well as stripping and waxing of linoleum and vinyl floors, and a whole lot more. We also run daily deals and special, which you can find at CompleteCareSystems.com, or simply call Tricia up at 727-364-5158, and she'll answer all your questions and give you over the phone free estimates. Or she'll send me out to your home or office to give you an on-site free estimate. At Complete Care Systems, we don't cut corners, we clean them.
Did you enjoy that little break?
I did.
Okay.
I was able to take a sip of coffee. Like I needed a break to do that. Just put it in my veins. All right, so the answer to the question is...
Oh, wait. The question was, what credit score do I need to qualify for a loan? You know what? We get that all the time. And you know what's
We
so
do.
funny about it? Because people now, with technology today, they go online
And
and
they're
they-
hearing all different things.
and they
And
do their
reading all
research.
different
Yeah.
things.
And then they'll go on freecreditscore.com or they'll go on Credit Karma, or they'll go on annualcreditreport.com that doesn't give you a score, and then we pull their score.
Well, and then sometimes too, and they don't understand why it's so different.
Yeah, why is it different?
Yes, and they don't understand that when they're doing all of this and doing all of this research, they can go on and they can say, and they'll call and they'll say, well, FHA said that there is no scores.
Yeah, there's
because
no score.
FHA is not a lender. FHA
Exactly.
doesn't lend the money to
Yes.
you. FHA only insures the lender. The lender is the one who makes the ultimate decision with what their minimum credit score is going to be. That's a very important thing to know. It's
So-
not FHA making that
So
decision.
there's an FHA rule or guideline, which there is no credit score requirements.
However,
But each lender is liable for whatever paper they loan on.
Correct.
So every lender can have what they call their own overlay on a
Right.
situation. So that's why
So
you
that's
need to
why-
check with your lender to see what their rule is.
And that's why somebody who called me very recently and they said, I thought FHA had none, and then I called my bank and my bank told me that I had to have a 640 credit score. Some of the lenders have 640 credit scores, some have 660, some have 620. There's a couple of lenders, handful of lenders that will go down to a 580, but the world
Sorry.
but the world changes. The lower the credit score, although it might be doable, your guidelines are going to change.
the
Just
debt-
keep that in mind.
The debt ratio qualifications are
The
different.
down payment is different.
The reserve requirements are
Right.
different. And most important, the rate.
Right.
Can be a huge adjustment to the
Big
rate if you got a
adjustment.
580 score versus 640
Now, the other
or
thing,
660, even on an FHA.
even on an FHA, the other point that Barry was bringing up that I wanted to touch on as far as credit score goes is keep in mind when you go on Credit Karma or something like that, or everybody's credit cards are, Discover gives you your credit score, Capital
Yep.
One gives you your credit score, all of the credit card companies are starting to give you your score. Keep in mind, that is the score for a consumer for you to look at, or Credit Karma. Every lender has, when they request your credit report, there's different algorithms that are important to them. If you've had a foreclosure, that's going to be a huge one. If they're pulling a credit and it's a car dealership, if you've had a repossession, that's a big factor in what is important to theirs. So a mortgage company,
Man, you love this credit
a car loan, I know, and we'll get more into that. A mortgage company, a car loan place, and a store credit card could all pull your credit report at the same time and get 3 different scores, because the algorithms for each one of those lender types is different.
That word algorithm's coming up a lot lately, isn't it?
I know, it is. Now that we've confused you, guess what? We'll do another credit show another day.
Yeah, thanks for bringing that up. All right,
I
next
know.
question. Should I get a 15-year or a 30-year mortgage?
Another good question.
Yeah,
That's a biggie.
I know. So here's my answer.
Yep.
It depends, but get a 30-year.
It depends.
No.
Basically, everybody's situation is different.
Everybody's financial picture.
Exactly. So a shorter term, your payment's going to be higher, obviously, because you're going to pay it off faster. So absolutely, that's great. But keep in mind that your payment is going to be higher, not double a 30-year like some
Right.
people think, but probably a few $100 more than what you're paying on a 30-year.
You know what I always like people to think about?
I know, I love this.
Think about what if, okay, you do a 15-year, 30-year, because most, every conventional loan now, my opinion is, do the 30-year.
Mm-hmm.
If you really feel compelled to pay the extra principal, you can calculate it out and do it and do a principal reduction.
But then you're not tied to that
Exactly,
payment.
because what if you
Right.
get sick
Right.
and you can't work?
Out of work for a month or
Or
something.
what if you lose your job?
Right.
The lender doesn't care.
No, they don't.
You still got to make that 15-year payment.
You can't just switch it back to the 30-year payment at that point
No.
when all of a sudden you
Right.
can't work because you're in a
or
hospital.
or maybe consider, sit down with your advisor,
Mm-hmm.
maybe taking the difference that you would be paying on a 15-year and fund your college education for your kids, or maybe fund your retirement or something like that. So
Especially being interest rates are so low these days.
Right.
Interest rates are at, Not an all-time anymore because they've ticked up a little bit, but they're still unbelievably low compared to, I've been doing this over 30 years, and in the entire history, we've never had interest rates this low.
Nope,
So,
nope.
you know what? If you're borrowing at such a small rate and you can invest it at a better rate, talk to your advisor.
Yes, absolutely. And I know this isn't one of another question people say, what about ARMs? Where did they go?
Right.
On
Right.
that.
ARMs
Should I
paying
get an
adjustable
ARM?
rate mortgage.
Yeah, because you don't see them right now.
No,
Because they're
not
not
a lot.
very, mostly your portfolio lenders,
Right.
your small banks will do them. Fannie and Freddie really aren't buying them right now.
Right.
They don't want them. So you're going to pay more probably right now on a 5-year ARM than you would on a 30-year fix. So why wouldn't you get a 30-year fix?
I know, and that's the whole thing. It's not that big of a difference. So
why
just go with
why
the
go
30-year
there?
fixed.
Go for the stable
Right.
payment. People say I'm going to move in 3 years or 4 years. Okay, maybe.
Right.
Life changes. Let's
Right.
face it. We have changes all the time. Okay.
Next question.
Why do some houses not allow an FHA loan?
That's something that's been kind of coming up a lot lately as
Yeah.
well.
And you see it. I know all our real estate professionals have told me, I'm looking for properties for them. MLS
Can
says
they go-
they
right.
won't take FHA.
Right.
Why?
Can these people go conventional because, there's not a lot of FHA houses? There's only a couple of reasons that make that happen. So if the house is a flip, FHA doesn't like it. So somebody bought the house 30 days ago, redid the floors, painted the house, did some repairs and things like that. And now they're selling the house at, $30,000 or $50,000 or whatever it is more. They did the work on it and everything, and they're flipping the property. FHA doesn't like that, still doesn't like that. FHA needs 90 days. At 180 days, 6 months into they will need a second appraisal. It's only after the seller has owned the house for more than 6 months.
So
that
investors are
it goes
buying up
down.
properties, rehabbing them, and looking to flip them quickly. And they don't necessarily want to wait 6
And
months
sadly,
to
there's
do
a
it
lot of
again.
those out on the market right now.
Yeah, well, it's not sad. It's good. It's rehabbing the world.
Well, sadly,
bringing
people
it back.
lost their houses. That's what I mean. That's the sad part.
That's
Somebody
true.
lost their houses,
That's
and
true.
investors came in and bought them
And
up.
remember, FHA has guidelines on, roof life expectancies that are different. The appraisal's
Right.
a little more stringent.
But FHA is not a bad loan. It is a great
It is a
loan
great loan.
product,
Don't
and
be
it has
afraid
the
of
most
it.
flexibility.
People got scared. Now, this is a really, really touchy thing that's going on right now.
Wow.
Okay.
Next question.
So, next question. I've lost 2 houses trying to negotiate the best deal. We're going to tell you what to do and how to take care of that problem right after this. Okay, we're back with a great question.
And this is coming up a lot
Yeah,
lately.
like
There's a lot of people out
multiple times a week.
there. You guys all know that because you're there.
Yeah,
So people are, trying to buy a house, and by the time they, call their spouse or call their parents or something, take a look, gone.
Yeah.
Gone.
And it's a seller's market out there. Let's
And-
face it.
and
There's
our-
not a lot of
Right.
inventory.
And our young people, our young first-time home buyers or whatever, they don't understand that the houses are going that fast. They don't understand what a seller's market is, and they don't understand, and they think that the realtor is just trying to push them, or the mortgage broker just trying to push them to buy a house. And they are used to researching things first.
Mm-hmm.
Well, let me take a look. Let me drive by the school. Let me see, let me talk to other parents who might have a child at that school.
Let my cousin look at it.
Yes, let Uncle Joe.
Because
or
Uncle
whoever.
Joe owned a house. He should know about it.
Yes. So
it
they
doesn't.
think they're doing the right thing by doing all of their homework and their research on, and I get it, we all get it, that this is a big investment for them, so they want to make sure. But what they're not understanding, and they're getting very frustrated at, is by the time they do call,
It's gone.
it's gone.
So think of it this way. It's not like buying a car. When you look at a car, you research it to death. You shop all the dealerships all around.
Right.
You're looking for the best rate on the payment.
Right.
Lowest interest rate.
And the best deal on the car.
warranties. You're doing all this, and that car's sitting there.
Right.
Okay. It's
Because
not
they
that
have
way.
a whole inventory of a whole bunch of those cars.
And another car's on its way right behind it.
Right.
In the real estate market, in the current status, it's a seller's market. My suggestion is, and investors are doing this, they're putting their offer in.
Yeah.
You get a 15-day inspection period, 10-day inspection period, whatever it may be. And most people don't know. I hate to say this, but they can walk no questions asked during that inspection period. So if you really want a house, get your offer in, get it under contract, get it, at least you have a chance to get it then.
Shout out to one of my real estate partners, Eric Jenkins. Anyway, I really liked the way he did it with his client. And I think I told you this, and you said that was really good.
Did I say it was brilliant?
He said, you might have. The way he put it, which I thought was really great to his client, because she wanted to, well, let me think about it or whatever. And he said, listen to me. He said, it's a hot market right now. There are going to be several other offers on this table for this house. These and they might not be full asking price. They might be somewhere lower. They might be somewhere upward. We don't know where they're going to be. But the bottom line is the seller of that house is going to be negotiating with one of those people. If you don't have your foot in the door, you're not even going to be part of that negotiating.
Well,
that was a really
well said.
I
well
know.
said.
I
It's
thought that
true,
was a
yeah.
really great. And
You
you know
gotta
what?
get your foot-
Boom! She put her foot in the door, and she got the
Good
bid.
for her. Congratulations to her.
Yes.
Well,
Excellent. Very good.
Hopefully another happy homeowner on their way, right?
Yes.
So, that's awesome. All right, so get the offer in. That's all I can say.
That's a biggie. That's a
know.
biggie because it's
Was it an
no time
FHA
to
loan?
wait. No, conventional.
You wanted to say something about FHA loans.
No, the only thing I want to say to our real estate partners out there, and please tell your sellers, don't be afraid of an FHA. You know, FHA used to be extremely strict on the property. They are still a little bit strict on the property, but conventional is not that less strict. If there are broken windows or, you know, concrete floors, it's going to be damaging to the appraisal. So they're not as strict as they used to be.
And it's not a subprime loan by any means.
Don't be afraid of it. No, the FHA is a great loan. Interest rates are lower than conventional in most cases. Your mortgage insurance sometimes can be lower depending on
the score.
conventional. Yeah, it's based on score.
So it's a good program.
FHA,
So
it's not.
don't rule it out.
Right. Don't rule it out, and don't be afraid of it because it's a great loan product as well.
All right. Another big question. I'm going to ask you, DeLynn, what are rates doing?
And here's my favorite answer to what are rates doing. And this is exactly what I say to people. If I knew that answer, I would have a crystal ball and sitting in Washington making a whole lot more money than I am here.
All right, here's my answer. If you don't like the rate, wait a minute.
Yeah, it's like the weather in New England. Just wait a minute.
Just wait a minute.
It'll change.
I mean, they're very volatile right now. And, you know, a lot of people don't understand what's going on, what's causing all that. I mean, right now, all indicators are rates are going up.
Right.
That's, you know, and it goes with the cycles of economy. When you have a strong market where inflation is a threat, rates are going to go up.
Right.
Okay.
And it works so that you guys know inverse from the stock market in most cases.
Yeah.
So stocks are doing really well. Everybody's pulling their money out of bonds and putting them into stocks. When the stock market is doing poorly, then everybody's pulling their money out of the stock market and putting it into bonds. Bonds are what drives mortgage rates.
Yeah.
So if people are putting their money
that.
into bonds, that's great. That means mortgage rates are going to be going down. But as soon as the stock market's doing really well, everybody's leaving the bond market and going to the stock market. And that's when bonds tank and mortgage rates go up.
So my suggestion to you, if you see a rate, you like it, you're comfortable because of the volatility right now, you might want to lock it in.
Right.
It might even be worth it to do a 45 or 60-day lock. The pricing's a little higher, but maybe just to have that peace of mind that you're not going to lose it because we've seen quite a bit of an increase here in the last few weeks.
Yes.
So
Yes.
it's definitely changing. So
And it's an ever-changing, daily, sometimes twice a day.
And then people
interest
go
rates can
online and
change.
say, well, I saw stuff in the threes.
Yeah.
Well, you know what? You can buy any rate you want. Let's leave it on
and
that.
forget about the newspaper. Oh, well, the Sunday paper said, no, forget about that.
Yeah. Every scenario is different on pricing, so you
Yes.
make sure yours is custom tailored to yours. Okay, so enough. We had a lot of great questions this week.
I know we did.
What's going on in the community? You got anything you want to talk about?
I don't know. Do you? He's always got stuff going on. I'm always saying to him, what do we got? What do we got?
I love it. I love it. All right. All right.
There's always
I'll do them
something.
in order, not necessarily of order of importance, but we have on March 13th, we have our next Lunch
my
and Learn.
favorite.
Lunch and Learn. Really
Probably
good.
because it's lunch.
Yeah, because it's lunch. This month is going to be at Flamestones over in Trinity.
Right.
And
Right
we're
off
going to be
54 there?
covering a FHA alternative, 3% down program. We have a special guest. She does a great job with it. She's
been on our show before, Deanna Case from Radian Guarantee, which is a PMI company. So bring your PMI questions. She's a phenomenal source of information, and she's been
that's gonna be
a good friend for a long time.
And we were packed at this last one, so
our last Lunch and Learn, it was
seating
wonderful.
is limited. Go online, find the Mortgage Firm Trinity's page. You'll see the event. Just say you're coming. Lunch is on us.
Shoot me an email, something like that.
Yeah, so, let us know. West Pasco Business Association has some things coming up, too.
They always have stuff going on.
Yes, they do.
Talk about a fun networking group.
Yes, it's a local charity and networking. And March 18th, we got a cornhole tournament coming up over at Fiddler's Green.
I think that's so funny.
Listen, $50 will get you a team. $50 will get you a vendor spot. There's cash prizes, and if you're a craft vendor, it's only $25. So go online,
we
sign
had
up
a lot of people come. Apparently, cornhole is like a thing, and it's a big thing. So all of you people who do a lot of networking in the community, these are people you don't know. Trust me, these people came from I don't know where, but these were all new people, all new faces were there last year when we did this. And apparently, cornhole is quite a thing, and they travel around to different tournaments. So
it'll be a fun afternoon. It's the day after St. Patty's Day. You can sleep in and come on out and relax and do some cornhole. April 6th, we also have the Lightning Bus Trip. Sign up for that. It's getting filled up already. That'll undoubtedly it'll be sold out. Last home game of the year.
That's kind of like that house, right?
Yes. So just go on WPBA.biz, sign up for this stuff. WPBA.biz or .rock. So that's it. So have a great week, everybody. Make sure you like our show, share it. Don't just like and share it. Heart it. We want you to give us some love.
Love it.
Okay, we're on Instagram.
We learned from our social media guru, Laura.
And comment. Comment. Tell us what you like about us. Tell us what questions you have.
That would be great.
Yeah, so it's all good.
Thanks, everyone. We appreciate you guys. We are today and every day.
Moving forward.
We'll see everybody next week.
Have a great week.